Lately, fixed mortgage rates have been all over the map, reacting strongly to changes in unpredictable economic data. And since real estate is really sensitive to interest rates too, Toronto real estate activity has also been a lot more emotional than normal, with a lot more people trying to time the market. Now, here's where we're at. We're always trying to preach that you should buy when you're ready because it's almost impossible to time the market perfectly. But since this is a burning question that's on many people's minds, this is our update video on where the Toronto real estate market is at lately, what the economists forecast for the rest of this year and next, and finally, we'll share a deal that we've been eyeing lately on the Toronto real estate market. If you're new here, we're all about helping you make better real estate investing decisions in Toronto. Don't forget to like and subscribe if you enjoy our content. Now, let's dive in. Let's do a recap of the market first. At the end of last year, 2023, three-year fixed mortgage rates took a sharp dive down, dropping by more than 1% over a few months. We also saw a strong pickup in Toronto real estate sales activity in January, with sales picking up by 37% year over year and listings not being able to catch up, going up only by 8%. But overall, buyers continue to remain cautious, so Toronto home prices continued falling throughout Q3 and Q4 of 2023 and into January. And for the real estate investor that makes decisions based on numbers, the deals looked even more attractive at this point. We saw lower prices and lower interest rates, which made the decision even more clear with better cash flows on deals. But things were still very uncertain, and many buyers and sellers were still unsure about where the market is at because the news keeps changing all the time. At first, experts were saying that interest rates might come down sooner than expected around springtime. But then once data about the economy showed that things were doing better than expected on the economic front, these rate cut decisions got pushed later down the road into summer, which pushed fixed rates up a bit again and slowed down buying momentum. But here's the thing. Even with fixed rates edging up higher slightly again over the past couple of weeks, they're still lower than they were in October. Plus, housing prices have gone down since October, so cash flows still look better than before. And then, more recently, inflation numbers for January came out this week, throwing us all for another ride because they came in much lower than expected, and this was mainly because of food and energy prices coming down. And if you don't count mortgage costs, which was the biggest contributor to higher inflation, inflation is just sitting at 2%, which is where the Bank of Canada wants things to be at. And as you can see, right after this news, bond yields have already been coming down, which means that fixed rates are probably going to follow soon. And this time, because buying momentum has already been building up from January, and now we're getting more confidence with CREA and RBC saying that Canada's housing correction has likely run its course and is bottoming out, it looks like there might be even more buying activity gearing up for spring. So, do we think this demand makes sense? Well, let's break it down. When someone wants to buy a house, they face typically a few hurdles. The first one would be the down payment requirement. The second one would be qualifying for a mortgage that's big enough. And the third one is making sure they have the ability to pay for the monthly costs afterwards. Now, with interest rates shooting up, it actually hasn't become harder to qualify for a mortgage because prices have dropped by 25%. And monthly payments are also more or less the same because of the lower prices as well. The big change for the better is that you now need 25% less money for a down payment to buy a house because of higher interest rates. So let's take a look at this example. Instead of needing $300,000 to buy a $1.3 million home in Toronto, which was what was happening at the peak in 2022, now you only need close to $230,000. Now, this is still a lot of money, but it is definitely easier than before. Like we mentioned before, from an investor standpoint with cash flows, buying today does make a lot of sense. And once things become clear for the end user buyer too, we suspect demand will pick up there too. And both of these combined should continue to build up momentum for the Toronto real estate market. And in case you're wondering, our team searches the market every single week to look for the best deals. And here's a deal that we've been eyeing these days. Check this out. You can buy a house for $950,000 and divide it into 3 units with around $80,000 in renovations. It's still definitely a project, so the upfront cost would be higher at $300,000. But because you are doing the work yourself, the property's value could go up as well. And similar comparables on the market these days are valued at around $1.1 million once it's all done. So what this means is that there would be a potential value add gain here of $70,000. Now, after renovations, you could get over $6,000 in monthly rents combined from the 3 units. And based on a 3-year fixed mortgage rate of 5.4% and then deducting operating expenses as well, you could make a very healthy cash flow of $800 positive a month here. Now, if fixed rates end up dropping closer to 5% by closing, which could be possible since we hit that in January, your cash flows could improve even more. On the other hand, if the market decides that they think that lower interest rates finally justify a higher value here, then we could see a 5% increase in values more quickly. Either way, this deal does make a lot of sense, no matter how you look at it. If you're looking to invest in Toronto real estate and want help searching for the best deals on the market, we're your team. We're not your typical real estate sales brokerage. Instead, we look at numbers to make better real estate investing decisions in Toronto. And that could mean looking for stronger investments with positive cash flow, thinking about risk management, and looking for ways to boost returns like value add renovations in gentrifying areas. If you want to discuss your private real estate situation with us, just head over to this link here to set up a time to chat. You can also check out more content on our website or find us on social media. And if you haven't done so already, please like, subscribe, and share this video if you think someone else might like it too. Thanks so much for watching, and I'll see you in the next video. Bye.